Hi, this is Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 28th year of business. It's Monday morning, August 7th, 2017, and the title of this week's very important audio blog is Crypto versus Fiat, the Ultimate Monetary Death Cross. Well, yet again, I'm actually starting early Sunday morning as I woke with some very important thoughts to share, after which I'll take a break to enjoy this beautiful summer Sunday to return early tomorrow morning and tape. The first of which relates to Friday's premeditated and painfully commonplace cartel raid following the LOL Great Jobs report. I initially described this incomprehensibly blatant manipulation in Friday's Why Bitcoin Will Make Gold and Silver Go Up Part 2, a title which relates exactly to today's principal theme. And I'm following up here to make the point that there is nothing commonplace about what's going on anymore, as the desperation to prevent the inevitable collapse of history's largest, most destructive fiat Ponzi scheme reaches a Yellowstone volcano-like boil. As, per today's extremely important principal topic suggests, the explosion of cryptocurrency will accelerate the ultimate monetary death cross that will spell the end of a millennium of economic terror as the world, with the aid of the greatest technological advancement of our time, prepares for a brighter monetary future in which sound money once again reigns, with, as you can imagine, profoundly positive ramifications for precious metals. To that end, trust me, no one understands the frustration of being financially punished for being right more than me. I've been fighting the cartel with every ounce of my being for the past 15 years, financially, professionally, and personally. I'm extremely proud of what I and the Miles Franklin blog have accomplished, as well as other monetary freedom fighters tirelessly fighting relentless market manipulation to spread truth, none other than the original New York Gold Pool Dragon Slayers, Bill Murphy and Chris Powell of GATA. As unquestionably our message has been spread, care of the miracle of the internet, to tens of millions of people. Trust me, the fact that central banks are the root cause of much of the world's evils, past and present, is becoming more widely recognized with each passing day. And with each draconian political act, like negative interest rates, cash bans, and capital controls, each 99% destroying economic policy, and each inflationary outbreak, as one by one the world's fiat toilet papers experience dramatic purchasing power declines, the timeline for monetary disaster and change accelerates, which, due to the aforementioned technological innovation known as cryptocurrency, may very well occur for the betterment of mankind for generations to come in the very near future. As for Friday, it's not like we haven't seen this before, literally dozens of times over the past 2 decades. Cartel covers naked comic shorts, idiot specs who amazingly haven't figured out this paper mugs game after all these years, pile on leveraged paper longs, price moves up painfully slowly via viciously capped rallies, and PM sentiment improves in hopes of the long-awaited commercial signal failure. Then, as we have seen the past 2 weeks, as highlighted by Friday afternoon's COT report, said commercials start naked shorting anew, damn the physical market consequences, and voila, paper prices are taken down anew, be it in ultra-thinly traded overnight markets like the flash crash during post-July 4th holiday shortened trading, or via a fabricated gold negative event like a Janet Yellen's speech or NFP jobs report. In this case, it was the latter, when despite a fresh 6-year low in the U.S. Hard Economic Data Index, the BLS decided to manipulate its economic data adjustments to produce a better than expected headline number, which at 209,000 is not only a not particularly strong number relative to the size of the economy, but was barely ahead of government-created expectations of 180,000 to start with. Throw in the fact that, as always, the report's internals cannot have been uglier, such as net full-time jobs again declining, manufacturing job gains non-existent, the highest gaining job categories being the lowest payers, and economic contributors like healthcare, education, and waiters and bartenders. The latter of which is simply baffling given how the U.S. restaurant index is at a post-financial crisis low. But then again, the NFP report, generally speaking, is a fabricated document with essentially zero semblance to economic activity, created solely for political purposes by political entities that must report good news if it wants to promote confidence. And given that the jobs of the report preparers typically rely on the ruling administration's beneficence for personal survival. I mean, consider the fact that Trump spent a year campaigning of the fraud the NFP report was, only to embrace it as soon as the campaign was over, per his post-NFP tweet of how great the job market is. Not to mention of how the surging Dow was signaling the strength of his leadership, after he deemed that very same Dow 1,000 points lower, a big fat ugly Fed-created bubble when on the campaign trail. As for markets, even the S&P 500 is starting to decouple from the world's most rigged market, the Dow Jones Propaganda Average, the latter of which has risen an incomprehensibly ridiculous 1,600 points in the past 9 days, during which the S&P 500 has barely budged, or for that matter, any major market index, from bonds to gold to the dollar index. However, the aforementioned U.S. hard data index has continued to plunge. And frankly, given the Frankenstein-like manipulations undertaken to produce the NFP jobs data, I'm having a difficult time considering it hard data at all. Certainly, nothing either statistically significant or, for that matter, indicative of anything about actual economic activity. As for precious metals, again, I share your frustration more than anyone, as not only is my financial well-being tied heavily to their success via my business and personal investments, but my reputation as a highly public figure for 15 years running in the space. That said, I'd put my reputation and track record up against anyone in the precious metal community, or for that matter, the financial media in general. As from a macroeconomic perspective, I have been dead on about essentially everything that has occurred to date, which frankly I attribute more to common sense and an unbiased view than great brilliance. Not to mention big picture monetary trends like cryptocurrency, which I first discussed in April of last year when, with Bitcoin trading around $440, I wrote the following, quote, "Take a look at the chart of that other alternative currency, Bitcoin, which as I write is on the verge of a major technical breakout above $450. Gee, its chart looks a lot like gold's from 1979 to 2004, just before it surged fivefold, only in this case compressed into a mere 2.5 years. Why do I bring it up, you ask? Not just because I've been very vocal about taking a position in it earlier this year upon news that negative interest rates and the war on cash were going global, but because I believe worldwide fear of monetary inflation and capital controls is dramatically escalating. Now, the fact remains that the relentlessly escalating trends of economic decline, monetary destruction, political chaos, geopolitical tension, and social angst amidst a fiat money fostered environment of historic industrial overcapacity, dislocated financial markets, and unprecedentedly negative demographic trends are setting the stage for dramatic political, social, economic, monetary, and perhaps military changes in the coming years, or sooner. Perhaps much sooner, although in many places, like Venezuela, Greece, India, Brazil, Turkey, South Africa, for instance, much sooner is a relative term. And during such times, preserving capital and preparing for the dramatic changes to come should be of utmost importance, particularly when historic market manipulations have produced historic investment opportunities, like the ability to take ill-begotten, unsustainable gains in the historically overvalued assets central banks have propped up and deploy them into asset classes that, due to their unfavorable status bestowed on them by said manipulators like gold and silver, have been depressed to their lowest ever inflation-adjusted levels, at a time when global demand stubbornly sticks around record highs, supply is in free fall, and above ground, available for sale, physical inventories are running on fumes. To that end, only physical metal provides true safe haven aspects, and only if stored safely and securely, as paper PM investment holders have learned painfully, particularly in the now 6.5 years since I sold the last of my own for good and went on an all-out blogging crusade warning of their dangers. Dangers, I might add, that I learned not just from having the vast majority of my personal portfolio invested in them from 2002 to 2011, but from working in the mining industry from 2006 to 2011. To wit, Friday's utter implosion to the tune of a whopping 19% in one day of the supposedly best silver mining company on the planet, First Majestic. This in typical mining stock fashion for producing anything less than a perfect earnings report, which it decidedly was not. In true mining company fashion, the poor production and earnings news was attributed to labor issues that have since been resolved. But the fact remains that production plunged, costs surged, and the issues of operating in second and third world nations, in this case Mexico, where the vast majority of unmined ore remains, were yet again front and center for the world to see. Which is great for holders of actual silver metal, which per last week's article title sits inertly and immutably, but not for derivative silver investments like miners, ETFs, closed-end funds, futures, options, and anything else that can be manipulated or otherwise impacted negatively by factors that have nothing to do with actual supply-demand fundamentals, many of which are being manipulated downward by the powers that be. particularly when many of those other factors can be controlled by anti-precious metal forces like the gold cartel and PPT. Irrespective, the net result of First Majestic's troubles was a further improvement in silver's historically bullish supply-demand fundamentals, as discussed in last week's Holy Grail of Silver Statistics article, rendering Friday's comically blatant cartel-orchestrated 2% silver price decline another opportunity to acquire physical metal at historically undervalued prices, relative to its own supply-demand fundamentals, the historic rate of fiat toilet paper expansion, and the price of gold. As for today's principal topic, the ultimate monetary death cross, as you can imagine, it relates to my increasingly strong belief that the future of utilitarian, day-to-day money is cryptocurrency, and more specifically, Bitcoin, which by no means will be everything to everyone, as in a global economy, countless dozens of applications must be addressed, but clearly will be dominated by Bitcoin. That said, per my May 23rd article, Decentralization, the Future of Monetary Value, Bitcoin will by no means be the only scarcity asset to store wealth. To that end, gold and silver's timeless immutability is destined to be more relevant than ever, now that they won't have to deal with government control in the pursuit of fraudulently administered gold standards. To the contrary, they will not only be liberated from the soon-to-collapse New York gold pool, but will be left to act at a time when supply is plunging, whilst monetary demand surges, in the manner they've always been best suited for, which is not as a catastrophic hedge or the backing of a monetary regime, but to the contrary, a plain old store of value, which due to unprecedented government price suppression over a period of 5 decades is so undervalued it has essentially no significant downside potential, and one of the best optionality plays ever given the massive price gains that will occur when the cartel is inevitably destroyed or voluntarily disbanded. As for the ultimate monetary death cross, anyone paying attention to cryptocurrency is aware that Bitcoin had a huge upside explosion this weekend, as not only is SegWit just 24 hours away from activating, but the hard fork of Bitcoin Cash, or Bcash as it is being derogatorily deemed, has decidedly failed to take even an iota of the real Bitcoin's market share. To the contrary, it's demonstrated just how strong the will of the global Bitcoin community is, and consequently how anti-fragile it has become. And now that SegWit will be activated, dramatically increasing the network's processing speed, the ability for any outside party, be it corporate, government, or otherwise, is on the verge of permanently disappearing. That is, any party to impact negatively Bitcoin. Not that they have been completely defeated yet, as undoubtedly they'll fire whatever remaining flood bombs they can muster before inevitably waving the white flag. However, when they do, it will be game on for the likely dramatically fast movement from today's Flintstones monetary regime to the future Star Trek-like version, in which, per the title of my article last week of the same title, the coexistence of scarcity assets like precious metals and Bitcoin, i.e. the twin destroyers of the fiat regime, will be as harmonious for investors as it will be profitable. In simple terms, the ultimate monetary death cross refers to the movement when the majority of those with the ability to take action realize that fiat currency is destined to be replaced by cryptocurrency. Nothing fosters understanding and adoption better than price changes. And in my view, the upcoming cryptocurrency explosion will make the dot-com-like surge of the spring look like the proverbial walk in the park. This weekend's Bitcoin price surge, followed by the now guaranteed SegWit integration later this month, may well prove the straw that broke the fiat camel's back, as in my very strong view, particularly now that its market cap is above the key investment threshold of $50 billion, the world's big money is about to enter the arena, which, trust me, will be a major inflection point, as despite said big money having not yet arrived, the explosion of cryptocurrency interest is already approaching dot-com-like levels. Per this quote I read this weekend from someone able to appropriately compare the two eras. I've been in the hedge fund space since 1998, and I've never seen anything like it in terms of the volume of launches in a particular area. It's just crazy. And when the big money does enter, now, per what I wrote in December's Why Bitcoin Will Make Gold and Silver Go Up, and Friday's Why Bitcoin Will Make Gold and Silver Go Up Part 2, governments the world round, starting with the ringleader of the dying monetary status quo, the US, which is already in a state of all-out chaos with a potentially credibility-annihilating debt ceiling crisis dead ahead, will be officially put on notice that the destruction wrought by their historically destructive fiat Ponzi scheme is on its last legs. Consequently, they will be, putting it mildly, distracted by the exploding attention Bitcoin receives, which will initially be deemed investment-related until, in the blink of an eye, it morphs into death-cross territory, i.e. when the financial media starts to question, rightly so, if crypto is destined to replace fiat currency. At which point the public will start to consider an alternative future in which everyone with a computer has the ability to not only participate but contribute to a not-so-solid supermajority that cumulatively is fed up with what a handful of ruthless sociopathic one-percenters has done to them, as well as their ancestors and descendants. Trust me, my friends, the first time you send or receive Bitcoin, and thus feel the power of speed, efficiency, and decentralization, it will have the same permanently perception-changing impact as when holding a quarter or a dime in one hand, you put an actual gold or silver coin in the other. In other words, the realization that the archaic, destructive, anachronistic, despicable, and dying fiat regime is about to be replaced, permanently so, by the technology that was created as a direct response, which not uncoincidentally was born in the heart of the financial crisis that represented the death event for fiat currency, of a system fraudulently created, first by the ill-begotten creation of the Fed in 1913, and second, the criminal reneging on the gold standard in 1971. At which point, a new, better world will start, in which decentralized money, note I use the word money, not currency, will be utilized for day-to-day transactions, whilst wealth will be preserved by the handful of scarcity assets still remaining, from old reliable gold and silver to newfangled technology-created assets like Bitcoin. And on that dramatic note, it's time for me to retire for the day, to enjoy the rest of my weekend. However, I'll be back bright and early tomorrow morning to add additional commentary and tape.
Well, it's Monday morning, and aside from the increasing inevitability of World War III breaking out in that other axis of evil nation, as George Bush put it, North Korea, which, like all of America's other major enemies, we created by provoking it like a poking stick at a hornet's nest. The mainstream media is off for August, and the market manipulators are trying to drain the last drop of dot-com valuations and utopian complacency from the Great Depression they've created by utilizing evil financial technology, like derivatives, high-speed algorithms, and off-balance sheet swaps. In the meantime, the global economic world is burning, social angst is at unprecedented levels, political strife is exploding, and geopolitical tensions vibrating like a tea kettle at 211 degrees Fahrenheit. Trust me, my friends, the historic crisis the powers that be have suppressed since 2008, utilizing tens of trillions of overt and covert liquidity via QE, ZERP, NERP, and the aforementioned financial technology, atop massive accounting fraud, media propaganda, and every imaginable method of financial fraud and psychological warfare is coming. And when it does, not only will the world change forever, but the asset pie will not even resemble that of today's Flintstones financial world. No, in the Star Trek world of the not-too-distant future, the hundreds of trillions of investable assets will not be divvied between the archaic Neanderthal financing and speculating tools known as stocks and bonds, whilst the intrinsically worthless tool of government control known as cash won't even exist. Yes, when said crisis arrives, cash will have long since been banned, if the inevitable hyperinflation that destroys all fiat currencies hasn't vaporized it first. And stocks and bonds, which like so many financial instruments were invented with the best of intentions, but eventually were abused and bastardized by bankers, politicians, and corporate titans, will be replaced with cheaper, less biased forms of shadow financing from non-banking entities in anonymous locales, in many cases on the internet, which likely the current cryptocurrency ICO or initial coin offering craze is presaging. Sure, governments will fight back, as we saw with the SEC's announcement last month that it deems ICOs regulatable securities. However, by simply offering them outside of the country, any such hostile governments can and will be circumvented, as LOL, the US population of 300 million or so represents just 4% of the world's population. Heck, Japan's government just legalized Bitcoin's currency status, thus encouraging such activity. Yes, the global investment pie numbers somewhere in the $300 to $400 trillion range, dominated by stocks, bonds, and cash, of which governments and their crony capitalist partners, the central banks, may well have, in just the past 9 years since the historic financial crisis they created, become the single largest holder. In other words, creeping financial communism to go along with the creeping political, economic, and social takeover that must be exercised by the 99% if the world is to survive the inevitable financial reset, advance, and thrive. Of that amount, less than 1% is held in precious metals, the product of historic price suppression combined with historic financial asset propping. Fortunately, in a world of hyperinflated currency, which must exponentially increase as the malignant terminal stage of history's largest, most destructive fiat Ponzi completes, the scarcity and unique monetary properties of precious metals is unchanged, per the title of an article last week, as inert and immutable as ever. In fact, the clamoring for scarcity assets, as I deemed them in several articles and audio blogs in the past 2 weeks, will be so powerful it will be literally unprecedented in history. So rather than viewing the historic reset that is coming as a market crash in which safe haven assets are the biggest benefactors, one should consider the historic changes that are to come as a shift from LOL risk assets with little reward for humanity to storage assets that benefit the 99% by storing their wealth and encouraging entrepreneurship because it enables them to save with confidence and invest in a world where the vampire squid-like tentacles of centralized economies are weakened, ignored, or in the best case scenario, annihilated. My friends, these are the long-term investing themes that will not only enable you to survive what's coming, in precious metals case, care of the soon-to-die gold and silver cartel, the lowest inflation-adjusted valuations of modern time, but thrive in the new Star Trek-like world of finance, where, whilst cryptocurrency will inevitably replace fiat, following the monetary death cross moment that is upon us now, the time-honored, slow but steady monetary mutability of gold and silver will serve as a competitor, not as a competitor, but a complement to Bitcoin and all the other cryptos utilized to make the future world go round. With the added kick of the dramatic price surge, perhaps in a matter of weeks or months, when the cartel is either overwhelmed by physical demand or, equally likely, voluntarily disbands, likely with little fanfare, when it realizes it is not only fighting a losing battle, but has far bigger fish to fry, as they prepare to flail at windmills in Don Quixote-like fashion in their shortly to commence Waterloo battle against Bitcoin. To that end, the need to protect yourself from what's coming, financially and otherwise, has never been more urgent. And if your desired protection prescription is precious metals, particularly if you seek the best possible storage options, we humbly ask you to call Miles Franklin at 800-822-8080 or go to milesfranklin.com and register for online purchasing and give us a chance to earn your business. Given the historic valuation anomalies the historic post-election price suppressions have created, never has the opportunity to high-grade your portfolio been more potentially profitable, be it to take advantage of historically low silver gold and platinum gold ratios or equally unprecedentedly low numismatic premiums. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thank you.